What's up everyone and welcome to today's video. In this one we're going to be going over ICT Son's model, and it's probably not the one you're familiar with. So this model is called the Caleb model, named after his son, and the specifics for this model required are just time and a shift and fair value gap. So I'm sure you're all familiar with the specifics in terms of what a fair value gap is, how time relates to price, and what a shift in market structure is. So in that case, I'm going to dive straight into the model and basically break it down before showing some examples. So in essence, ICT made this model for his son so that he doesn't have to be on the charts at all times during the day. Only during specific days and specific times should he be on the charts looking for this model to appear. So basically, the model is when a specific time's opened, he looks for a liquidity grab straight away or a few minutes inside this time section, and then waits for a shift in market structure and then a fair value gap to form, which he enters off and then targets 5 to 10 pips and no more than that. So on ES, it will be 5 to 10 points and he'll target that, and then no matter whether it runs further or runs to a daily draw on liquidity, it doesn't matter because he's already out of the market within those 5 to 10 pips. Now, diving straight into the first example, I'm going to show you the 930 example. Remember, there's 3 times this can be used on. One of them is 930, and then in the next examples I'm going to show you, I will show you the different times there. So on the 930 example, which is one of the times we can use to look for this model, as you can see here, 930 opens up. I don't like to use the 930 1 minute candle if it takes a low, so I would wait for another liquidity grab here. We're going to wait for a liquidity grab, which we have now above this high. And remember, this is a scalper's model. I told you he only aims for 5 to 10 points. This is a quick in and out method, which is why it doesn't require a daily bias or anything like that. And now we wait for a fair value gap to create. As you can see, we have now created a fair value gap. And what I'm going to do is take a sell from here with my stop loss above the body of this candle, and then target max 10 points. Remember, this one ends up being about 7 points to that low because we are in a scalper's model right now. We're utilizing it and we are not aiming for large moves or anything like that. We get wicked into the trade and then price lags around slightly and runs to our take profit. This is what I mean by we have a scalper's model. If you tried to aim down here, price could easily reverse on you, but this isn't what the model is used for. The model uses the manipulation at 930 open to trick traders into going long, and then fair value gap for a quick scalp down below liquidity again. Moving on to the second example, I'm going to show you the highest probability time to use this model, which is the start of PM session at 1:30 New York time. So I'm going to run through the model and see if we get an entry on this one. If we move forward a bit, as you can see, price is lagging around. We may have a liquidity grab up here if we can reach above the highs. And as you can see, we cannot do so. So this is equal to this, which isn't a liquidity grab. And then as you can see, we moved straight down and took out the 130 low down here. Now remember what we wait for. We wait for a fair value gap to form, and then we'll target this nice equal highs here with a fair value gap above it, which would be a nice target. So if we skip forward, let's see if we can create some sort of fair value gap, and bang. Right there, that would be my entry on this inverted gap too. So if we just take it from here, I'm going to buy now. And remember, 1:30 is the highest probability time for this to happen. We can use 8:30, 9:30 and 1:30 New York time. 1:30, however, is always best for it. Remember, scalper's model, so I'm going to aim for 6 points on this one with my stop loss at, I'm going to say, below this body. A nice 1-to-1. Remember, if you're looking for high risk to reward models, this is not the one for you. This is for someone who maybe has to work during the day and can only be on the chart at certain times during the day. For example, PM session. If you're here in the UK, PM session opens at 6:30 UK time, so a lot of the time you will be off work by then. This might be your only model you want to trade. If you get home from work and you've got now have some free time to eventually trade, you clearly can't trade while you're at work. So now this is a model for you to be able to trade when you get home in the evening time. Take a buy from there. If we run it through, price lagging around near our take profit, which is fine. The model is still valid. We take another dip lower, the model is valid. Trust the model, and then bang, we hit take profit there on our 1-to-1.2. And remember, this is the 1 minute chart, so all that waiting is not that much. If this was an hourly chart, you'd be waiting a day or two for this to hit you take profit, but the scalper's model allows us to be in and then out within at least 30 minutes or so. Remember, rules: liquidity grab at a specific time of day. The shift in market structure makes it more probable, however it is not necessary. As you can see here, we had a nice momentum move up, create a fair value gap, tapped into it twice. As you can see over here, engineered buy side liquidity as we came back to our entry and then ran to take profit, took out the liquidity above these highs and the internal liquidity inside the fair value gap. So I would encourage all of you to look into this model and see which time of day works best for you, whether that's 8:30, 9:30 or 1:30 New York time. And then it's just a quick, simple scalp which can get you a 1-to-1 at any time of day, which also is very useful, especially if you're in a challenge. A 1-to-1 can, 1, give you confidence, and then 2, make you climb the ladder to that profit target. So I hope you are finding this video useful. And now before we leave, I just want to show you the final 8:30 example, which, as you know, is the second time in the morning session we can use for this model. So we have a high put in before 8:30. 8:30 opens up, and here we have an SMT with a different pair. So NQ, which is the inverse of ES, well, not the inverse, but its correlating pair with ES, did actually take the high. So we count that as a liquidity grab. We move forward. Now we look for what? Our fair value gap to created, which happens here as we move down. And that would be a sell, stop loss, 9 points up there. And then a target, a nice 10 points down there. Again, a 1-to-1. Let's see if it plays out. And this won't occur every day. However, a lot of the time you will see this happen. Because we're scalping, it doesn't really matter how much distance within the trade there is. We can take 1-to-1s and be comfortable knowing that it's a highly probable trade and it does work. So as you can see here, we had the same setup, breakdown, fair value gap, entry, and then target 10 pips max. So that brings us to the end of our video. I hope you did find use in this and hopefully discovered a model for those of you who work jobs or work a 9-to-5 or have different priorities to take care of and can only be on the charts at certain times of day. This gives you a nice 3 options to choose from. So if you did, please do like and subscribe. Drop a comment telling me you found it useful, and I will be sure to make more videos for you. Check out my links in the description to follow me on social media, and I'll catch you in the next one. Thank you for watching.